Hello everyone, welcome back to the channel. Today's video is about something very important, the mindset behind successful trading. Why do most traders fail? Even after learning technical analysis, chart patterns, and indicators. The truth is uncomfortable. Most traders don't fail because they lack knowledge, they fail because they don't understand how trading really works. Many people enter the market thinking, if I find the right strategy, I will make money. But market doesn't reward strategies alone. The market rewards discipline, patience, and emotional control. And that is why today's book is so important. The book is called Market Wizards by Jack D. Swagger. This book is not a theory, it is a collection of interviews with some of the most successful traders in the world. Different markets, different styles, different personalities. But they all have one common truth. They all think differently from the average traders. आजको भिडियोमा I'll break down those lessons slowly, clearly and practically with examples you can relate to, especially if you're trading NEPSE. The interviews will be covered in a different video. Right now, this is just the summary or the essence of the book in different parts. Let's begin. Part 1. Who are the market wizards? When you hear the word market wizard, you might imagine someone who never loses. That is not true. Market wizards are not perfect traders. They are the survivors. Most of the traders in this book, they have lost money early in their careers. They have made big mistakes and they have faced self-doubt and pressures like we do. What made them different was not talent or intelligence. It was the ability to learn from the mistakes instead of repeating those mistakes. One trader in the book says something very powerful. I didn't succeed because I was smarter than the others. I succeeded because I stopped doing stupid things. Real line is so important, I know. Most traders don't lose money because they don't know what to do. They lose money because they do what they already know they shouldn't be doing. That was part 1. Now let's go to part 2. The market is always right. This is the strongest idea that has been repeated throughout this book, Market Wizards. The idea is that market is always right. As traders, we love our opinions. We say, this stock is undervalued, this company is fundamentally strong, and this support level should hold. But the market, it does not care about our opinions. Professional traders do not argue with price, but the beginner traders, they argue. Professionals, they observe and they react to the market. निप्सेमा हामी धेरैजना भन्छौँ यो त राम्रो कम्पनी हो यो त यतिभन्दा तल झर्नै सक्दैन तर के हुन्छ द प्राइस किप्स फलिङ यसमा मार्केट विजर्डको सिम्पल माइन्डसेट इज if the market proves me wrong, I will get out of the trade. That is it. Have no ego, have no emotions, and have no hope, and get out of the trade. That is as simple as it is. That was part 2. Let's go to part 3. Why prediction is a dangerous habit. Most new traders are obsessed with prediction. They want to know where is the top, where is the bottom, how high will this stock go. Market wizards don't think like this. Jack Schwager has asked many top traders in this book, do you try to predict the market? Almost all of them have answered no, and that surprises most people. Because we as beginners, we believe that prediction equals skill. But professionals know prediction will lead to emotional attachment. Instead, they focus on what is the market doing right now, whether price confirms the idea, and if not, then exit quickly if wrong. That is the 3 things they focus on. Let me repeat that. What is the market doing right now? And is the price confirming what they thought would be happening? And if not, then exiting the trade very quickly. In NEPSE, false breakouts and slow movement are very common. And prediction traps traders into holding bad positions. But reacting to market, that is what saves them. That was part 3. Now let's go to part 4. Losing is not failure. It is just part of the job. This is one of the most important sections of the entire book. Every market wizard accepts that loss is normal. They don't enjoy losses, but they don't fear them either. One trader says, if I avoid losses, that means I will also be avoiding profit. This mindset is very critical. Beginners see losses as personal failures, proof that they are bad traders and something to avoid at all cost. But professional traders, they see losses as just as a business expense. In NEPSE, many traders destroy their accounts not because of bad entries, but because they refuse to accept small losses. They move the stop losses, they average down the stock, and they hope that the stock will rise. Market wizards do none of that. They caught their losses early and move on. एउटा सानो लस एक्सेप्ट गर्न धेरै डिफिकल्ट हुन्छ, तर त्यो डिसिप्लिनले नै लङ टर्म सर्भाइभल दिन्छ हामीलाई मार्केटमा. Now let's go to part 5, risk management, the real secret. If market wizards had only one lesson, then this would be it. That risk management matters more than what your strategy is. Every successful trader in the book talks about risk. Not about profit, not about targets, they talk about risk. They all know one uncontrolled loss can erase months of profit, and survival always comes before growth. Common rules among market wizards: risk only 1 to 2% per trade, always define risk before entry, and never add to losing positions. In NEPSE, liquidity risk and sudden moves are real. Without risk control, even good analysis will fail. Professional traders ask this first: if I am wrong, how much will I lose? If not, how much can I make? Part 6. Discipline is stronger than intelligence. Many people believe smart people make good traders. The market wizards prove otherwise. Some traders in the book openly admit they were not academically strong, they were not mathematical geniuses, but they were all disciplined. What does discipline mean? Discipline means that you follow rules even when your emotions are screaming otherwise. You trade the same way every time and you stay consistent. NEPSE traders often switch styles: intraday today, going for swing tomorrow, and going for long-term investment next week. Market wizards stick to what works for them. Inconsistency is one of the biggest account killers. Part 7. Match your trading style to your personality. One of the most underrated lessons in market wizards is that there is no universal trading style. Some traders are aggressive, some are extremely conservative, and some trade every day, some trade only a few times a year. What matters is what fits you. If you are emotional, short-term trading will punish you. If you are impatient, long-term investing will frustrate you. Market wizards know themselves first and then the market. यो कुरा धेरैजनाले इग्नोर गर्छन्. But we have to understand that someone else's trading style might not fit you because you two are completely different people. Part 8. Emotional control is a learned skill. Fear, greed, excitement, these will never go away. Market wizards don't eliminate emotions, but they know how to manage them. They do this by predefining rules, position sizing, and journaling trades. One trader says, if I feel emotional, I stop trading. That one habit alone saves careers. नेप्सेमा एक्साइटमेन्ट पनि फास्ट आउँछ, प्यानिक पनि फास्ट आउँछ, र विदाउट गुड इमोसनल कन्ट्रोल हाम्रो हरेक गुड सेटअप फेल हुने चान्सेस हुन्छ. Part 9. Patience creates big money. Market wizards are not always active. They wait, they observe, then they stay out when conditions are unclear. Sometimes the best trade is taking no trade at all. Beginners always want action, but professionals, they always want clarity before action. Patience is boring, but patience is profitable. Part 10. Failure is not the end. Almost every trader in the market wizard failed badly at some point, but failure did not stop them. It trained them. They reviewed their mistakes, they adjusted their behavior, and they improved their process. Failure only becomes dangerous when you keep repeating it. The final message of this market wizard philosophy is trading success is not about predicting markets, it is about managing yourself and managing your emotions. You cannot control the market, but you can control your risk that you are taking, the discipline you are on, your behavior, and your consistency in trading. Those are the things that are on your control. Always remember the market rewards patience and not excitement. In the next video, I will talk more about the interviews that was done in Market Wizard books, and I will talk about the different chapters in that book. Until then, protect your capital, respect the risk, and stay disciplined. Talk to you in the next video. Thank you very much.